Um, Hi everyone, my name is CLT and I'm a trader. I trade the equities market, which are basically the Nasdaq, the ES, the YM, the Dow. Okay, Dow is the YM, sorry. So yeah, you know what they are. And I'm basically going to be doing a sort of analysis on the pairs that I trade moving forward, talking about my anticipation, what I'm expecting for a new week, what I'm expecting for the next day, and probably also talk about trades that I took using the narrative and framework that I used. So, this is not financial advice. This is mainly for educational purposes because I'm trying to see how I can help some people get better in analyzing the market and applying certain aspects of psychology to it. So please do not take this as financial advice. So with that being said, let's get into it. So the first thing that I do every week is I look at the economic calendar and I want to see the news events that we have for that week. So I have a way that I frame high impact, medium impact, and low impact news events. And this is something that I learned from AM Trades. And by the way, he is the owner or the author of the logic that I trade. Even though we all learned from ICT, he refined the logic that I trade and he has made it easy for me to understand. So I suggest you guys check AM Trades out on Twitter. So the significance of each news event varies. So we have a high impact event, we have a medium impact event, and we have a low impact event. And what I classify as high impact events are not necessarily red folder events, right? They vary. So they are like groups in different categories. So I have three events that I call high impact events, which are CPI, FOMC press conference, let's do this PC, and what's it called? NFP. So these are the news events that I consider my high impact events, right? So these events, I am not trading the day prior to these events because they are high impact events. And high impact events tells me when not to trade and not when to trade, right? So that is the use of the high impact events. And for medium impact events, I have the FOMC statement, I have the PPI and PCE. So these are events that I consider medium impact events because they have the ability to impact the daily range, whereas the high impact events has the ability to impact the weekly range. So I'm basically not going to be taking a trade session prior to a medium impact event. And for low impact events, these are every other events that are not this and this. So these events, there are no restrictions to this. I can trade London, I can trade New York, depending on the framework that is being offered, right? So with that being said, um, taking a look at the economic calendar here, sorry, we have news on Monday, we have news on Tuesday, we don't have news on Wednesday, we have news on Thursday, and we have PCE on Friday, which is what? A medium impact event. So on Monday, I personally do not trade on Monday, so that's my personal rule. I don't know about you, but that's my personal rule. So I'm basically looking at how Monday trades to frame what Tuesday will likely do, or possibly Wednesday, right? So Monday, out of the conversation, Tuesday we have low impact events. There are no restrictions. So depending on the framework that is being offered, I can trade on in London session or in New York session. Going to Wednesday, there are no events, there are no restrictions as well. I can trade both sessions depending on what is being offered, right? Listen to what I'm saying, depending on what is being offered. I'm not saying I would go into every day looking for a trade because there are no restrictions, right? So there has to be framework, there has to be narrative, right? There has to be logic before I put on the trade because I have rules that I follow. And on Thursday, the same thing. no medium impact, no high impact. So I would basically go into the chart looking for a trade during the London session or the New York session. Then on Friday, this is it. There is restriction. In the case where I will not be looking for a setup in London, I'm only focused on New York session post PCE, right? So now that you know that, I'm going to clean all of this and go to the charts. And by the way, this is the NASDAQ. This is the daily charts. So I'm only trading NQ and ES. So these are my babies. These are the ones that I focus on. So once in a while, I would probably talk about the dollar because the dollar moves every market. So analyzing the dollar, you should know what to do on EU and GU. So right now, I'll be doing more of NQ and ES. So moving forward, what can I see, right? There are two relevant levels that I focus on, and there are opposing close candles and highs and lows. Those are the two relevant levels that I focus on to get engaged for me to frame a reversal or a continuation. I do not trade fair value gaps. I do not trade breaker blocks. I do not trade inversion fair value gaps. I do not trade all of that, right? I'm only looking for highs or lows or opposing close candles, which you guys call order blocks, right? So going into the market, I usually want to see a relevant level get engaged for an intra-week reversal. So seeing this, we have this high here. We have these lows here, right? So what do I want to see? The week has opened up. Yeah, this is Monday. And I would personally want to see how the opening days trade in respect to these levels, right? So taking a look at ES, you can see ES we already ran out its all-time high. Whereas on NASDAQ, that high is still open. So this is a potential SMC, but it's not valid enough for me to say I want to go into the chart and start looking for shorts, right? I still need NQ to solidify that framework for me in taking out this high, right? So we are in close proximity to this high. So see how far we are from this candle to this low. See how close we are from this candle's open to this high. So what do you think is easy for price to trade to first? Obviously this high. So my expectations would be for this high to get tagged, right? Before I can start thinking of framing a reversal. So now thinking of the price cycles, the phases of delivery on the daily chart, we have expansion, we have consolidation, we have reversals, and we have retracements. So I will never trade an expansion like this. I would never trade an expansion like this to another expansion. I would never do that, right? Expansions are an intermediary phase in price, right? So I'm only looking for an expansion to a consolidation to an expansion, or an expansion to a retracement to an expansion, or an expansion to a reversal and an expansion, right? So with that being said, last week closed in a pretty small range, not so large, right? So we left these lows, and if I am going to frame longs, I need these lows to get run out because I want to see a protected low form below the weekly opening price at a relevant level. So looking at Monday, I can already see that Monday has tagged this high, right? So that is not enough framework for me to frame trades tomorrow. I need more information, and I would personally want to see something like this. I would personally want to see Monday take out this high. When I get this, then I have framework, and I would like to also see Monday close in a small range because 80% of the time, if Monday closes in a small range, that gives way to frame trades on Tuesday or Wednesday, right? So I would like to see that. That is what I would like to see. I don't adapt to the market. I make sure the market aligns itself with me. That is my motto. That is what I follow, right? So it's easier for price to go to take this high first. So if Monday doesn't do that, that's fine. I also want to see what Tuesday will do. So if Tuesday does that, that's the only way I am going to be thinking of framing trades to the downside. I don't think we have what it takes to start trading lower, but if we don't do that and take out this high, then we're likely just going to remain in this range all week. And what does that mean? That means I have nothing to do, right? So the only thing I would like to see is for this high to get run out, then I can frame shorts in the direction of the weekly candle, because my model is the weekly range logic. I'm looking to frame trades, expansions in the direction of the weekly candle. So the same thing on ES, looking for the same thing, because now with how Monday is trading, what do we have? We have low resistance highs, and ideally you do not want to be trading away from low resistance highs. You want to be trading away from high resistance highs. So if we had something like this where Monday, let's say Monday traded, took out this high, then this is what I want to see. If I see this and we have this close, right, I want to see what price does the next day, which will be Tuesday. I want to see price remain in the lower half of this range for me to frame shorts, right? So with all of that being said, these are my expectations for the week. So I will be updating the charts as we go during the week, because I'm a bit flexible as well. So depending on how we trade today and maybe tomorrow, that would give me framework to know if I'm going to short, or if I'm going to long, or if I'll do nothing. It's as simple as that. So once again, this is not financial advice. This is mainly for educational purposes. So thank you, and we'll see you in the next one. Bye.